Hey, this is June from Turning Point Life Investment, and this video is for the week ending in March 28th, 2009. So we've been having some pretty wild swings lately, some very extreme bearishness to almost some pretty extreme bullishness. Now, I've been mentioning these last couple of videos that this is a pretty good chance that this could be the bottom, and it pretty much looks like this is the bottom towards this entire decline that we've been having. This bullish engulfing pattern, as you can see, we've been having some follow through these last couple of weeks. Pull back towards this 20-week moving average. This is a weekly view, by the way. Moving averages are great targets for pullbacks, especially when the market is trending, just like how it is right now. So its first target was the 20, and now most likely the 50. What is a good chance that we might hit the 50 and we can break through this 20-week moving average. Now, of course, it's not going to go straight up. We're probably going to get some kind of pullback, a little bit of profit taking before shooting a little bit higher from that point on. Now, going into a 6-month daily view, like I mentioned earlier, we went from pretty much some extreme oversold to now to pretty much some extreme overbought, so just one wild ride after another. So just like how the market doesn't go straight down forever, it can't go straight up forever as well. So expect some kind of pullback next week. So here's the thing, there's pretty much two ways the market can correct itself out of this overbought. Either it can go sideways and just meander along the way, basically allowing prices to come out of overbought, or it can pull back down, drop down towards some kind of support. Right now it's looking towards the 75, maybe even 76 area, and then shoot higher from that point on. Either way is possible. Now, also I've been mentioning from those past videos that this 50-day moving average has been a pretty strong barrier towards this market. But look at what's going on right now. We pretty much traded above this 50-day moving average for this entire week. So that, like I said, a shift in momentum, a shift from bearishness all the way down here to some pretty strong bullishness right about now. It seems like every time there's a dip, every time there's some kind of sell-off, buyers came in and start picking up stocks. Okay, so that's totally different from what happened before, where every time we got a little bit of rally, sellers came in. Right now, anytime we got some kind of sell-off, buyers came in. Okay, so it's a shift, change in momentum. Okay, going into a shorter time frame on an hourly view, like I said, the 76, 75 area is going to be some pretty key strong support level. I would say that's a pretty good target for some kind of pullback. On a weaker pullback, you can look for this gap right here, right around above 78, maybe even 79. So there's some pretty decent support levels in the upper 70s and maybe even the mid 70s. So look for these targets as a pullback, and if we do get a nice bounce off of this, that would be a pretty good time to start buying, picking up stocks, or even buying calls for the SPY right now. Not right now, but during the pullback, after the pullback. Okay, going into the VIX, really same story. Surprisingly, even though we had some pretty wild fluctuations, the VIX has remained rather calm. But notice how it's more or less hugging the bottom support level, as opposed to before here, when we made the new low, prices were hugging above this upper resistance level, okay, trying to break out above it. But now it seems like prices are trying to break below the support level, which is another indication of more bullishness to come. So just keep an eye on this. If there is a true breakout, meaning that it's able to close above it and trade underneath it, then I would say we're in a pretty strong, we're pretty set for a nice strong rally. So overall, going back to a 3-year weekly view of the SPY, if I were to pull out some Fibonacci retracements, you can see how at least most of the time a pullback, some kind of correction, usually at least a 38%. You can see how we can shoot for pretty much right at the 100 mark right here at the 38%. Anything higher will put us around the 110, which is a 50% correction of this entire decline. So these are, as far as long-term targets, these two price levels are pretty good, and of course the 62% will bring us pretty much up at 120. So these three targets, I would say the first two are more or less a more likely target. This third one, not so likely. But like I said, these are just future projections as to, okay, once the rally does pick up, we can expect some kind of selling in these 100 and 110 level.